What happens when a country's political crisis becomes so silent on the streets, yet so loud in the financial markets, that it threatens the stability of an entire continent? Let's talk about the day France's crisis went quiet. In early December 2025, France's major unions, CGT and Solidaires, made a huge announcement. They called on workers across every major profession, teachers, train conductors, nurses, to walk off the job in what they described as a quasi-general strike. Their target, the government's 2026 draft budget, a plan that included cutting thousands of public sector jobs. The expectation was a complete national shutdown. Schools closed, trains frozen, hospitals overwhelmed. But when December 2nd arrived, something unexpected happened. The large disruptive protests that had been forecast simply didn't fully materialize. Turnout was noticeably muted. To a casual observer, it may have seemed like the tension was fading. But the experts weren't watching the streets. They were watching the bond markets. And there, the alarm was deafening. While physical strikes fizzled, a financial strike was unfolding in full force. International investors who hold 50% of France's national debt had begun to panic. This is crucial because foreign money is hot money. It can leave the country instantly at the first sign of trouble. The relative calm in the streets signaled something far more alarming. The crisis had already shifted into a new phase. It was no longer about a protest. It was about a global loss of confidence in France's ability to manage its finances. The battleground moved from visible marches to the invisible panic of trading floors, where trust is priced by the second. So what caused this collapse in confidence? It can be traced directly to a historic breakdown in basic governance. Since late 2023, France has cycled through 5 prime ministers. Nothing like this has ever happened since the founding of the Fifth Republic in 1958. This isn't bad luck. It's the symptom of a parliament that is completely deadlocked. After the last election, the chamber split into 3 blocs. The left-wing New Popular Front with 180 seats. President Macron's centrist Ensemble Alliance with 159. The far-right National Rally with 142. A law requires 289 votes to pass. No combination of any 2 blocs reaches that number. This has created a perfect political gridlock, and France's political culture makes this even worse. Unlike Germany, France does not have a long tradition of forming stable coalition governments. Its system expects a clear winner, not compromise. The result? No stable budget, no agreement on reforms, total paralysis. When former Prime Minister Michel Barnier proposed spending cuts to tackle the deficit, both the left and the far right united to vote it down. The government collapsed. This is the paralysis that terrifies financial markets. A nation unable to make decisions while its debt keeps rising. Let's move to the numbers, because this is where political chaos becomes economic danger. France's national debt has exploded to $3.2 trillion. That's 114% of its GDP. The EU's official limit is 60%. France is nearly double that, and it gets worse. Every year, France spends far more than it collects in taxes. Its budget deficit is between 5.8% and 6.1%. The EU rule, 3% max. France is failing both tests, massive debt and a deficit twice the allowed limit. This creates a terrifying trap called a doom loop. High debt and big deficits scare investors. Scared investors demand higher interest rates. Higher interest rates increase the deficit. A bigger deficit increases the debt, which scares investors even more. The cycle accelerates. Government projections show that by 2029, interest payments alone will exceed $100 billion a year. That's more than France's entire defense budget. Money that can't go to education, healthcare, or pensions, only to servicing past debt. This isn't a spreadsheet issue. It's a deepening hole with no ladder. Now we arrive at the most shocking fact in this entire crisis. In late 2024, something happened for the first time in history. France's 10-year borrowing rate rose higher than Greece's. For more than a decade, Greece symbolized Europe's worst economic disaster. It needed multiple bailouts. France, by contrast, was seen as a rock of stability. But in 2024, the markets flipped the script. Lending to France suddenly looked riskier than lending to Greece, Portugal, or Spain, countries at the heart of the last euro crisis. A country's 10-year bond yield is essentially its global credit score. When France's rate jumped above Greece's, it wasn't a fluke. It was a verdict. The world was saying France's political paralysis is a bigger risk than Greece's long-standing economic weaknesses. France, once a pillar of Europe, is now seen as its weakest link. And France's credibility is evaporating far faster than anyone expected. But this isn't only France's problem. In an interconnected financial world, a crisis of this size doesn't stop at borders, especially inside the Eurozone. France is the second largest economy in the Eurozone after Germany. It's not a peripheral state, it's a central pillar. This is why analysts now warn of financial contagion. When investors lose confidence in France, they immediately ask, who's next? Borrowing costs start rising for Italy, Spain, and other high-debt countries. This stresses the entire system. The European Central Bank now faces an impossible choice. It may need to intervene with huge bond-buying programs to calm markets, reviving memories of the 2010-2012 euro crisis. But back then, the problem was in small economies on the edge. This time, the epicenter is France, one of Europe's core powers. That is a game changer. The stability of the euro and the credibility of the entire European Union now depends on whether France can break its political deadlock. Its paralysis has become Europe's vulnerability. While Europe struggles, major Asian economic powers see something else. For countries like China, Japan, South Korea, and the rising economies of Southeast Asia, France's turmoil is not an opportunity for aggression. It's a confirmation of a long-term global trend. Asia's modern success has been built on long-term planning and political predictability. For decades, they've watched Western nations swing between short-term political cycles, ideological whiplash, and unstable coalitions. France's crisis, 5 leaders in 2 years, constant budget fights, looks like the extreme version of that instability. The key point isn't confrontation, it's contrast. Asian governments and state-backed investment funds, which control trillions, value stability above all else. And when they look at Europe now, they see a major nation where that stability is disappearing. This doesn't mean Asian powers will attack the euro. It means their confidence and their capital will quietly flow toward regions they view as more reliable. This is the quiet but powerful shift. Economic influence is moving towards steadier hands. The rise of Asia today is not simply military. It's the gradual transfer of financial trust from a fractured West to a more coordinated East. France's crisis is accelerating that rebalancing. France's internal paralysis doesn't just weaken its domestic stability, it weakens its global role. For decades, France was a major diplomatic voice, a key EU power, and an important military actor. But a government constantly fighting for survival cannot lead. It creates a power vacuum, and into that vacuum step others. China expanding trade and infrastructure links across Africa, the Middle East, and parts of Europe. The Gulf states deploying sovereign wealth funds globally. Turkey, India, and South Korea pursuing assertive foreign policies, not by confronting France, but by quietly advancing into spaces where France is now absent. Western dominance isn't collapsing with a dramatic crash. It is fading through slow erosion. And perhaps the most chilling signal didn't come from markets, but from the French government itself. In late 2025, France released a preparedness guide titled Tous responsables, all responsible. On the surface, it teaches citizens how to survive 72 hours without state services, blackouts, cyber attacks, network failures, supply chain breakdowns. The tone is calm, but the implication is seismic. A modern developed government is telling its people, we may not be able to protect you. Prepare yourselves. This guide isn't about natural disasters, it's about systemic fragility. When a country issues a manual for basic survival, it's acknowledging that key systems may fail, and that it no longer has full control. So what happens next? The political calendar makes things worse. President Macron's term runs until 2027. He cannot call new elections without dissolving parliament, an enormous gamble. Prime Minister Sébastien Lecornu is governing day to day, surviving only because rival blocs can't agree on a replacement. France is stuck. Analysts see three possible paths. 1. A fragile truce. Parties temporarily cooperate to pass only the bare minimum budget, postponing real reform. 2. Continued stagnation. The same paralysis continues, debt grows, services erode. 3. A political earthquake. Rising anger fuels a dramatic shift to the far right or far left in 2027, an unpredictable outcome. The nation is in a holding pattern, but the plane is losing altitude. So what's the bigger lesson? In today's hyper-connected world, political failure has an immediate economic price. For decades, major Western economies could afford dysfunction. The world had fewer alternatives. Not anymore. Investors and nations now judge governance in real time. They see a country with enormous strengths, but trapped by its own inability to govern. And they move on. This crisis is accelerating a larger global transition, from a world centered on a few Western powers to a fragmented multipolar world. In this new era, the most valuable asset isn't military might or natural resources. It's basic governability, the ability to stay stable, pass a budget, and execute long-term plans. France's story shows what happens when that foundation collapses. Because once stability erodes, everything else, economic power, diplomatic influence, national cohesion, falls with it. And that collapse can happen far faster than anyone expects. With that said, thanks for watching, and until next time.